Have you ever made a stock pick, purchased something based on a friend's tip or the latest news cycle? That's the problem with listening to all the voices out there. We allow our emotions to control our investment style, and we need to be in this for the long run. We're going to look at Nvidia because it is so popular right now, because it's all over the news, and I want to share with you some of the things I've seen over the last few days. So many people have FOMO. It's the psychology in finances, the fear of missing out. And what happens is when stocks are taking off, everybody wants to get in on it. And when they start pulling back, everyone wants to sell out of it. They get scared. And that's actually the opposite of what you need to be doing. And I'm going to use Nvidia as an example because of what I've seen it doing over the last several years, and particularly the last year. And then over the last couple days of what it's done and how the news cycle changes, the fear-mongering that goes on. I want to preface this by saying this is not a recommendation to buy or not to buy Nvidia. I'm only using it as an example because it is so popular right now. We could use any of the tech stocks because they are very volatile. They go up very fast. They go down very fast. That is part of the excitement that people want to get in on it because they think they're going to get the home run. We're going to share a little bit here on Simply Money what we talk about of buying mutual funds or ETFs, index funds, and diversifying and not having to worry about this emotional roller coaster. But let's look at Nvidia as an example. Over the last few days, I've heard a lot of people saying tech's overpriced and it's going to bust and we're in a bubble. And maybe it is. I don't know. I don't worry about it because I've diversified. I am involved with Nvidia, but I have it in some of my index funds. It is a high portion of some of the index funds that I own. So I get a piece of Nvidia and it's good. And when it's going down, I lose some of it. But it's not solely concentrated on Nvidia or solely concentrated in the tech field. I'm diversified in different sectors: healthcare, finance, retail, all these different sectors, because the market, you need diversification not only in different stocks, but in different sectors. So looking at Nvidia, I'm going to pull up this chart just from Yahoo Finance. You can see today, this hasn't been too bad. It's been pretty flat. We've had a high of, what do we get up to? A high of 116 and a low of, looks like we hit a low here about 111, give or take. So it's been fairly flat. It's had a little bit of volatility. If you're in Nvidia, the first thing you need to realize, look at this beta right here. It is a 1.68. Beta means that compared to the S&P 500, which would be a 1, if you performed exactly like the S&P 500, you would be at a 1. If your volatility, meaning how high it goes, how low it goes, compared to the S&P 500, you'd be lower than 1 if it wasn't as volatile. The higher above 1, the more volatile, meaning it goes way higher, but it can also drop way lower. And you have those high and lows, and that's what drives people in and out of the market, and why people end up losing money, because they buy because of the excitement, because of the hype. Then they sell when they start seeing sell-offs or corrections or different things taking place. And we're going to take this step by step, and we're going to look at the big picture. So if you look at today, it's been flat. But let's look at 5 days. And this is what's been going on over the last 5 days. You see the red because we're down about 5%. In 5 days, Nvidia has dropped 5%. But right here is where it really began going crazy. Back a couple days ago, it hit this high here about 124. And then all of a sudden you see it dropped all the way down here. Look at this. This day here, it got down to 107. This was a big drop in that day. Couple days there, it was dropping, and people were all over the internet, all over YouTube. People who had said 2 days earlier, don't miss out on Nvidia. This is the buy of a lifetime. Get in on Nvidia. Were the same people a couple days later saying, oh, you need to get out of Nvidia. It's in correction. It's a bubble, blah, blah, blah. You need to ignore those voices. If you're going to buy Nvidia, you need to buy it for the long term. Again, I don't recommend buying single stocks. I recommend buying index funds. If you want to be in some tech stocks, get into an index fund that is heavy on tech stocks. One I like is SOXX. It is all AI tech stocks. I believe it's an up-and-coming market, and there's a lot of upside on that. but it's a very small portion of my portfolio, just something I wanted to touch on. And it has 30 different companies that are all focused in the tech and an AI industry, but it has a big chunk of Nvidia in that. So I do get a piece of Nvidia, but I also have other things like Broadcom and other companies that are heavily tech and AI industry type stocks. But you can allow those ups and downs to drive you. If you're buying a stock, you need to buy it and hold it. And you need to have a plan of holding that at least for 5 years, in my opinion. If you're going to need the money in less than 5 years, you don't need to be invested for long-term in volatile situations. Doesn't mean you pull out of the stock market, but you better be diversified to where you can ride those waves. If you're ready for retirement, you need to be diversified, and you need to have that money in places where you have different sectors balancing each other. When one's riding high and the other's low, they're balancing each other so you don't have those big, huge losses. You can't be all in one sector. Well, here you see the 5-day and how these people they go crazy. But if you're in the stock market for 5 days, you're a day trader. You're not in it for an investment. You're in it trying to day trade. In my opinion, that's right up there with gambling. You're just trying to see if you can beat the market and hit it big. And unless you're trained, unless you know what you're doing, you can be in big trouble. So avoid that. So here you have the 5-day, but let's look 3 months as so short term. In investing world, 3 months is just a blip. It is nothing. Think about 2020 with COVID. 3 months, the stock market lost as much as it had ever lost since the Great Depression in one day. It just bottomed out. But a few months later, it was recovering and then took off from there. 3 months in the stock market is not long. But look what's happened in 3 months. It's up 34, almost 35% in 3 months. You have the opening here of 83, almost $84 3 months ago. It hit its peak right here on June 18th of $136, which was great. You know, we have these dips. This is people saying, sell, sell, sell. Nope, it's going up. Buy, buy, buy. And then you have these last few days here. See how it's going down? But if you had bought it 3 months ago, this little dip here wouldn't bother you because, yeah, it sucks. You look and you say, oh, I've just, decreased my portfolio value. But if you look at your cost, you have increased your cost by 34%, your investment by 34%. That is great return on investment. I will take 3-month 35% return any and every day, hand over hand. That is great. But 3 months, I didn't buy my stocks, my index funds, my ETFs for 3 months. I bought them for years. I bought them for the long haul. So let's go out a little further. Again, 6 months isn't long, but over 6 months, and Nvidia has returned 85%. You're looking here when you bought it, if you bought it 6 months ago, and you're excited, and maybe you got scared here, it started running down, and then up here, super excited, but now you're hearing all the voices, oh, sell, sell, oh, buy, buy. Again, it's this cycle. But look at that increase just in 6 months. In 6 months, you have increased 85%. Let's go a little further. Let's look at 1 year. Oh my gosh. Would you be worried about this slight little dip from a few days ago to where it is now? If you had bought a year ago? No. You wouldn't be thinking it's going to drop down to below $45 and you're going to lose everything you invested. And that's what people say. Right here, they're saying, oh, I've lost it all. I'm losing all my money in Nvidia. Not if you bought a year ago, you didn't. And if you bought it here at this peak because you heard all the noise and you're like, oh, Nvidia, I need to get in on this. You've lost some of its value, but you haven't lost anything because you didn't sell it yet. Don't sell it. Wait and see what happens long term. You are in this for the long term. In 1 year, you've increased 145%. You have increased your return on investment. You have increased 145%. That is crazy return for 1 year. So these ups and downs that you're seeing here shouldn't be bothering you because you bought it a year ago. But let's look more realistically. Let's look at a 5-year return because that is where you should be looking for investments. If you're buying a single stock especially, Index funds, ETFs, maybe you could go a little shorter, but I would still say 5 years minimum. That if you need the money within 5 years, you probably need to be looking at much more conservative investments. But in 5 years, if you don't need the money, Nvidia, if you had bought it back here, look how flat that looks. All those ups and downs hardly look like anything because they're spread out. Look at the incredible increase. Over 5 years, it has grown 2,836%. Yes, seeing it from here to here, it's not fun. But look how high up you are from here. You're not worried about that dip because look what you would have missed. If you sold right here at $77, you freaked out. Look what you missed. Look at that increase right there in that short period of time, in a matter of a couple months. And you say, well, we're not there. We're down here. Fine. If you had sold at 77, you'd be at 112, 113 right now. I would much rather be there. I don't sell when it goes down. In fact, when I see it dip like that, that's when I'm going to buy more. One last thing. Let's look at 10 years. Because long term, we're going to look at 2014. 2014, look at that, 47 cents. How would you have liked to have bought Nvidia back then for 47 cents? Now, this is taken in consideration stock splits, so it wasn't actually that price, but compared to what it is now with the splits, that's what it would have cost back then. They factor all that in. But the fact is, 10 years ago, if you had bought Nvidia, you were up 24,478%. So percents, we see the ups, the downs, we see the chart. Look how flat that looks for all those years. You don't see the ups and downs because it's spread out over years. And you see some here because it's been so incredible. AI is just taking off. Nvidia is taking off. But let's put this in dollar amounts. Let's start back here at we start at 6 months. If I put $10,000 in Nvidia 6 months ago, that 85% return would mean I now have almost $25,000, just under $25,000. That's not bad. Over doubling your money in 6 months. If I can double my money every 6 months, I'm a happy camper. Trust me, that is incredible. Let's look a little further. 1 year ago, if I had bought Nvidia and put $10,000 in it at a 145% increase, my 1 year $10,000 investment would now be worth $84,000. How would you like to take $10,000 today and 1 year from now, it'd be worth almost $85,000? Think you'd be happy with that return. You wouldn't be panicking about the little dip here, little dip there. You would be excited. But let's look at what real investors do 5 years and beyond. 5 years ago, if you'd bought Nvidia, 2,836% return, your $10,000, you'd bought $10,000 of Nvidia 5 years ago. Think about 5 years ago, 2019, before COVID. Right before COVID, you'd bought $10,000 of Nvidia. Today, it would be worth $373,000. Selling when it's down is the detriment. That's how people lose their shirt in the stock market. And now let's look at 10 years. 2014, you bought $10,000 worth of Nvidia. Today, at the 113, in the dip that everyone's freaking out over, in the dip that everyone's saying sell, 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 in the dip that the same people yesterday said buy, buy, buy are now saying sell, sell, sell. If you had bought $10,000 of Nvidia back in 2014, 10 years ago, with the 24,000% growth, you would have $2.5 million. 10 years, $2.5 million. Only those people who buy and hold will see that increase. Again, I'm not encouraging you to buy Nvidia. I'm not encouraging you to buy any single stock. I'm encouraging you to invest and hold for the long term. Understand what ETFs are. Check out the video here I did on what index funds are and how they work and why they're so important in diversifying your portfolio. I'm going to be doing a video shortly on why we need to invest and not just save our money. Saving money is essential. That's the first step in being able to invest because you have to save some money in order to invest it. But if you just tuck it away in a savings account, you just tuck it away in a low interest CD or something, you're not even beating inflation. We're going to look at the impact of lost investment and lost buying power of not investing. But this is how investing works. And again, if you diversify, you're not going to see this type of growth everywhere. This is just ridiculous. It's awesome. I'm glad for those people who did buy here and is still holding on to it here. And if they want to sell here now, and they've made money, go ahead and sell now. That's your business. But don't buy it short term and then panic when it goes down, because that's where you lose. Thank you for joining me on Simply Money. I hope this helps you. I hope it puts you at ease to stick it out, to have a long-term vision and understand that the market is volatile. The roller coaster. Let's zoom in a little bit here as we get ready. 1 year, look at this, up and down, up and down. People buy on the up, they sell on the down, and they lose money if they're short vision. Buy, hold with a long-term vision, and you will be successful. Again, thanks for joining us on Simply Money. Don't forget to hit the like and subscribe button, and we'll see you next time.